Everyone in the world falls under four categories. The four categories are luxury, comfortable, poor, and charity. Now let's assume there is a family which is comfortable. This family ball is held at the comfortable position when a person is at work. If this person at work is removed, this family ball will usually fall down straight away down to charity from family members. To hold this family ball at this point, we need to immediately put a pump of money, because if there's no person at work, we need to have money at work. This process is called income protection due to death or illness. The only two reasons why a person would not be at work is due to illness or death.
What is term insurance? Term insurance is a type of life insurance policy that provides coverage for a certain period of time or a specified term of years. If the insured dies during that time period specified in the policy and the policy is active or in force, then a death benefit will be paid. It is usually best for additional short-term coverage due to a sudden increase in liabilities and commitments, or if the insured is confident that years down the road when the term expires, he or she will have no financial dependence or liabilities to be worried of. So here are some of the benefits of term insurance. Number 1, term insurance is affordable, less expensive. Term insurance is an inexpensive option for those who have other financial commitments and require immediate attention. Number 2, it provides you more flexibility. It allows you to choose how long your liabilities and commitments should be protected for. So let's say, for example, I do have a mortgage. Buying a term or decreasing term insurance for that kind of liability is a fantastic idea because you know exactly what the end point is, so you don't need to buy a whole life product to be able to protect just something that has a fixed liability. Number 3, it is great for short-term needs. Term insurance is a very good solution for protecting commitments which are time-bound and have a fixed duration like mortgages, business liabilities, personal loans, and kids' education. So what are some of the disadvantages of term insurance? Number 1, when the term insurance expires, it will be more expensive to purchase life insurance. Once the term is completed, you have to apply for a new one, and at that point, you might not be medically or physically able to get one. Number 2, the policy lapses if you don't pay the premiums on time. You have to pay your premiums on time. Even if you skip one premium, the policy can potentially lapse. Number 3, lack of flexibility. There's no flexibility available when it comes to term life insurance. If you want to increase your cover or reduce your cover, change your term, you have to literally apply for almost a new product. Now let us illustrate this with a case study on term insurance. Let's say we have Peter, a 50-year-old father, which is a sole breadwinner with a wife and a kid that is 6 years old. Like most family, Peter owns a house that is on mortgage. Should Peter pass away one day, a certain amount of money will be required to firstly support his family, secondly support his kids' education, and thirdly to pay off his mortgage. Peter should buy a term insurance under these scenarios. Number 1, he is confident that his kids and wife will not require any further financial support in X number of years when the term insurance expires. Number 2, Peter is confident that he will pay off his premiums on time so that it will not lapse. Number 3, Peter currently can't afford a life insurance which is more expensive but requires the amount of coverage. In this scenario, buying a term is a good temporary solution. Number 4, Peter knows that his mortgage will be paid off in X years and is buying a term insurance for protecting commitments which are time-bound and have a fixed duration. In general, term insurance is best for short-term commitments that can be predicted. How much critical illness or income protection you should buy? The general rule of thumb is 5 to 7 times of your annual income is the amount of critical illness or income protection you should buy. And the reason is,
If you do fall sick, it usually takes you between 5 to 7 years to come back to work effectively. Now, critical illness has always been mistaken as medical insurance. Please understand there are two different products. Critical illness insurance or income protection insurance protects your income in the event you fall sick. However, medical insurance makes sure that we can take care of your hospital bills, your doctor's fees, your medicines, etc. So please do not confuse the two. They're two different products. Critical illness or income protection is a product that starts to pay you a fixed income when you fall sick. So if you do fall sick, they would give you 5 to 7 years of your annual income to be able to recover from that illness so that your life expectancy increases. It's a fantastic product to be used if you're single or married. When you're single, you probably need lesser life insurance but more income protection due to illness. If you're married, there's a family that's dependent on you, and therefore you should be buying 5 to 7 times of your annual income as income protection. When is the best time to buy insurance? Very interesting question. It's a very important question to know when is the right time to buy insurance. Well, the best time to buy insurance is one day before you die. I want you to think about it. If you knew exactly when you were going to pass away and you bought it one day before you died, you'd get the maximum return. The unfortunate reality is we don't know when we will die. So, when is the best time to buy insurance? The best time to buy insurance was yesterday, because something can go wrong today. Now, unfortunately, we cannot go back in time to do that activity. So the best time to buy insurance is today. The best time to buy insurance is before something happens. Because once the event has occurred, when something has already gone wrong, we cannot insure it. Insurance can only be purchased before something goes wrong. And if you try to buy insurance after something's gone wrong, it's not going to happen. You're either going to get rejected, or you're going to get declined, or you'll end up lying on your application form. Because there is a very simple question on it. Has it already happened? So, ladies and gentlemen, the simplest answer to this question is today. It's the best time to buy insurance. Because yesterday is gone, tomorrow we don't know. Today is all you have.